Hello and welcome to Legacy IAS Academy. In this video, we are going to discuss about the Indian economy previous year questions of 2020. So in this year, 2020, we had 14 questions coming from Indian economy, out of which 12 were from static and 2 were from current affairs. As you will see, these current affairs questions as well, I would not clearly classify them as current affairs. Why? Because even with some amount of static knowledge itself, you would be able to solve these questions. So the first question, what is the importance of the term interest coverage ratio of a firm in India? What you can observe is this is something related to your microeconomics. So generally UPSC does not ask questions on microeconomics, but now in the past few years, it has become a practice that every 2 years or 3 years once, it does ask one or two questions, not even two questions, one question every 2 years or 3 years once. And most of these are related to concepts. The moment you read the phrase, you will be able to break it down and make sense out of it. So in 2020, they had asked this interest coverage ratio. So as you can understand, it is just about interest which the firm is supposed to pay as a proportion of what we know as EBIT, earnings before interest payment and tax payment. So interest as a part of earnings before interest payment and tax payment. So that would be the ratio. That would be called as what? Interest coverage ratio. How much interest can be covered using the earnings even before you deduct the interest and the taxes to be paid by the firm. So if interest coverage ratio for a firm is higher, which means its earnings should be more, right? So it will be able to cover more of this interest. And then at the same point, you can also say that if it is lower, right, if the interest coverage ratio is lower, then it is not in good shape. Now with this understanding, we just have to see the two statements. The first statement, it helps us understand the present risk of the firm, that a bank is going to give a loan to, right? So yes, it will be able to give us an idea about what the risk is. So if it has higher interest coverage ratio, it is better, right? So it can cover more interest rates, whatever interest rates are to be paid to the banks, that can be covered. It helps in evaluating the emerging risk. So in the future, will it be able to pay the interest or not? It just shows the debt servicing ability, right? Debt servicing ability of a firm, either for the present or for the future, in both cases. Now, higher the borrowing firm's level of interest coverage ratio, the worse is its ability. No, it's exactly the opposite, right? So generally, it is no thing whereby if this ratio is more than 1.5, right? If the ratio is more than 1.5, then it is generally assumed that it is safe enough to give a loan to such a firm. Okay, if it is less than 1.5, then we consider that to be somewhat let's say vulnerable. The firm is rather vulnerable, so you're not supposed to give a loan to this. So by this measure, the answer would be A, 1 and 2. Okay, it was pretty direct question, I would say. Secondly, which of the following factors or policies were affecting the price of rice in India in the recent past? So leave aside this idea of recent past. So it is basic understanding of the concepts which you have to go through. All you have to see is, if something is affecting the price, it means it is somehow affecting the market as well. So anything that affects the market demand and supply will be able to affect the price as well, right? Say it is asking about the price of rice in India. So minimum support price. With the minimum support price, what is the government doing? Government is procuring or saying that it is going to buy the rice, whatever amount is produced by the farmers. So the government purchases all the rice, how much ever amount of rice the farmer is willing to pay at this minimum support price. Will it affect the market demand and supply? Yes, absolutely. Government's trading. Government is the one which is going to sell it at the fair price shops sometimes, even in the market sometimes. Is it going to affect the demand and supply? Obviously, yes. Government stockpiling. Basically, government is storing the food grains. Will it affect the market demand and supply? Absolutely, yes. Consumer subsidies. If the consumers are getting the rice at subsidized prices, will it affect the price directly? Yes. Rather than the market demand and supply, the prices are affected directly. So all the four would be the answer for this. It was a pretty straightforward question, right? So that would be D. Under the Kisan credit card scheme, short-term credit support, look at this, it is a short-term credit support is given to farmers for which of the following purposes? Clearly, it says that it is a short-term credit support, right? So even if you did not know that whether it is a short-term credit system or a long-term credit system, still the statement itself will help you eliminate the options here in this particular question. Working capital needs for the maintenance of farm assets. This is one. So what is working capital? This is short term itself. So one is there. Two, purchase of combine harvesters, tractors. These will be very expensive ones, right? And they will not be given under Kisan credit card because it is short term credit support. And this is infrastructure. Basically, it is infrastructure capital, right? So to buy the capital, you have different schemes, not the KCC scheme. Consumption requirements of the farm households, that is absolutely right. Post-harvest expenses, again, that is for short term itself. Construction of family house, look at this. This is an asset creation. Again, as I told you, that would be expensive. It has to be for long term. Cold storage facility, again, infrastructure or capital, long term. So the only possible options are 1, 3, and 4 here, right? You have there option B. So it was a pretty easy question, right? So what is the loan given for KCC loans or given for short-term credit requirements? So post-harvest expenses, right? Post-harvest expenses. Then a marketing, right? For marketing, it is given. Consumption requirements for probably buying fertilizers, chemicals, seeds, right? Maintenance of whatever working capital is, the working capital needs, right? So to pay to the labor or to maintain certain activities like dairy animals, inland fishery, for all these activities, right? So this is basically for small level of credit. This is basically small amounts of credit will be given under KCC scheme, not the larger ones. So easily with that understanding, you can eliminate 2 and 5, right? That would be huge amounts of money that would be required as credit for those two purposes. Next, question number 4. It is a very easy question because clear understanding of WPI and CPI, if you have done it somewhere, right? If you have had the understanding properly, if you have clearly gone through these concepts, it would be really easy. So the weightage of food and consumer price index, as you can understand, CPI has 6 categories of items within it, out of which you have food and beverages as one, right? Miscellaneous, housing, and then you have uh, clothing and footwear, fuel and lighting, yes, and then pan, tobacco, and intoxicant. Out of these, the highest uh, you know weightage is given to food and beverages, which is somewhere around 48%, right? So less than 50%, 48%, that's the highest one. So that would be for consumers viewpoint CPI. In WPI, highest weightage is given to your manufactured goods, which stands somewhere around 64%, right? So by that measure, obviously the food items have the highest weightage, where in the consumer price index itself. So obviously one would be right. The WPI does not capture changes in the prices of services, while CPI does. Look at this miscellaneous. In miscellaneous, you clearly have education, transportation, health, right? So these are all services that are covered in CPI. So CPI does cover. What about WPI? WPI has three broad components. One is manufacturing, the other one is primary articles, and the other one is fuel and power. Okay, fuel and power. So all three put together, that would be 100% weighted. This would be 23% somewhere, and this would be 13% somewhere around. Okay, so here you don't find services at a wholesale level. So statement 2 is right as well. Reserve Bank of India has now adopted WPI as its key measure. Earlier it was WPI, which was considered to be the headline inflation. As of now, CPI is considered as headline inflation, on the basis of which key policy rates, that is repo rate, is decided. So 3 is absolutely wrong. The answer is 1 and 2 only. So the next one is, in India, which of the following can be considered as public investment in agriculture? Very simple. Public investment means the government's investment in agriculture, and this should be, right, in the form of investment. As the name suggests, it should be investment. What is investment? Basically, some sort of asset should be created. Okay, some sort of asset should be created. Let's see if any of these actually fall into that criterion. Okay, so first one is fixing minimum support price for agriculture produce of all crops. So it is just like a subsidy. Okay, it is just like a subsidy, so it cannot be an asset. So it is REVEX, revenue expenditure. So one is not that. Computerization of PACs, primary agriculture cooperative societies or credit societies, absolutely yes, asset is being created. So why? Because it will enhance the productivity of the agriculture sector, and easy access to credit, right, facilities would be that. So that would be 2, right? 2 is right. Third, social capital development. So what is the social capital development? So it is the value that can be created through networking amongst, right, networking amongst the farming community, and building trust amongst the communities, right, trust building. How will this actually help? uh, you know how can this be considered as public investment? Why? Because with networking and trust building, let's say for example, self-help groups are created, right? For this, government has to invest, right? That is public investment. And then some cooperative societies are created, so that will all create what? Networking and trust building. So this will make the society get efficiency, right? Efficiency gains will happen, productivity would increase. Okay, productivity would increase. So social capital development, is it a part of public investment? Absolutely yes. Free electricity is applied to the farmers. Again, free electricity supply would be considered a subsidy, right? So social capital development, that would be what? An investment. Free electricity, that would be a subsidy. Waiver of agriculture loans, no asset created, so wrong. Setting up cold storage facilities, absolutely yes. So 2, 3 and 6, do we have that option? Yes, absolutely yes, right? So can you go any other way around? Let's say waiver, clearly we know it is not an option. 4, free electricity, that also we know. And 1, we clearly know. 5, 4 and 1 should not be there in the option. So 5, 4 and 1 should not be there in the option. You don't have such an option. The only option that is available is C. So even if you did not know about social capital development, still you could get the answer. Yeah. Next, with reference to Indian economy, consider the following statements. These are related to your what? Money market instruments. Okay, these are all related to money market instruments. So commercial papers are the promissory notes issued by the corporates to raise the money. It is like a bond for a short term issued by the corporate sector. for less than 1 year, basically money market instruments for less than 1 year, right? So in this, it is a short term instrument. Yes, whether it is secured or unsecured, it is clearly unsecured. So one is right. Certificates of deposits, these are issued by banks. This is for interbank transaction for overnight, let's say. Sorry, certificates of deposits, sorry, these are the deposits made by some entity, maybe high net worth individuals, or for that matter any other firms, right? They can make a deposit in the banks, and they can get a certificate of deposit from the bank, right? So that is for short term only. Again, this is for short term only, less than 1 year. So this is used by banks, right, to raise the money for short term. So it is clearly saying it is a long term instrument. Absolutely wrong, right? Thirdly, call money is a short-term finance used by interbank or transactions. One is call money, the other one is notice money. Call money market, this is applicable for only 1 day, right? 1 day or one night. Whereas notice money is up to 14 days, but more than 1 day. Okay, that would be notice money. So both are short-term finance and both are for interbank transactions. So 3 is right. Next is zero coupon bonds. Zero coupon bonds are nothing but the bonds which are issued for a discount rate of what? Discount rate at the face value, discounted at the face value itself, right? So how can you understand this? Let's suppose there is a bond on which it is written rupees 100. General understanding is it should also come with an interest rate plus percentage should be added, right? If somebody is borrowing the money by issuing this bond, they should be paid an interest as well. But the thing is, it will be sold for 96 rupees, right? Sold for 96 rupees. So basically face value is 100, sold at 96. How much is the coupon rate? That is the interest rate. Interest rate mentioned on the bond is 0, nothing. It is not mentioned. So whether it is interest bearing, no, it is not interest bearing, but it is sold at a discount at a face value, which means it is sold for 96 in this case. So what is the gain you are going to make when you return this bond? 4 rupees gain you are going to make. Why? Because the issuer will pay back 4 rupees to you, 100 rupees to you. So 96 you paid, but you got back 100 rupees. 4 rupees is the interest gain you are making, right? So issued by the scheduled commercial banks to corporations, not essentially. These are generally issued by the government, right? Government issues them. So it comes in two forms: T-bills and cash management bills, CMBs. Okay, so T-bills come in different variations: 91, 182 and 364-day T-bills. CMBs come with anything less than 91 days as tenure. So both work in the same manner. Which manner? Discounted at face value. Clear? Next, so the answer would be, so 4 is wrong, so 1 and 3 only are correct, so C would be the answer. Question number 7, it was pretty easy question. Why? Because it is asking about non-financial debt. When we say non-financial debt, any debt which is not related to finance sector. What is included in the finance sector? You have the banks, you have the RBI, you have other financial institutions like, let's say, insurance sector, you have pension sector, right? So the instruments under consideration would be your bonds, shares issued by these institutions, right? Now we'll see which of the following would be included in the non-financial debt. Housing loans owed by the households. So who is owing this? Households are owing this. Do they belong to the financial sector? No. So they are non-financial debt itself. Amounts outstanding on credit cards. Whose money is outstanding here? Whose debt is it? It is the individual's debt. So again, non-financial. Treasury bills. Again, whose debt is it? It is the government's debt to the people. So again, it is not the debt of the bank. So all the three would be non-financial debt. So what is the answer for your financial debt? If it was financial debt, then whatever the bank has taken as loan from someone, let's say it has taken the loan from RBI, right? So the bank is supposed to pay it to the RBI still. So what is the debt owed by the bank to the RBI called? Now it is financial debt. Whatever money the financial institution owed to others would be called the financial debt. Clear? So the answer is D, 1, 2, and 3. Next. This is a question related to WTO, TRIMS, trade related investment measures. This is quite a misleading agreement, the TRIMS agreement. Why? Because while the name suggests it is investment measures, right, it is actually not related to investment. So when you look at the agreements related to goods in WTO, you get one is related to GATT, General Agreement on Trade and Tariffs. The other agreement is related to TRIMS, the one on which the question is given. The other one is related to subsidies, Agreement on Subsidies, Agreement on Agriculture, Agreement on Countervailing Duties. So you have so many agreements on goods itself, and one of them is TRIMS. On services, you have GATS, right? On services, you have a GATS agreement. So TRIMS agreement is clearly related to goods, which means quantitative restrictions on import of foreign investors are prohibited. Let's keep this aside. They apply to investment measures related to trade in both goods and services. Look at this. Services not included. So 2 has to be eliminated outrightly. So A is gone, B is gone, and D is gone. The answer has to be C. So now look at the options. Quantitative restrictions on imports by foreign investors are prohibited. Basically, it would be a barrier to trade. That is why it is prohibited. Quantitative restrictions cannot be imposed on imports. And then they are not concerned with the regulation of foreign investment. As I told you, it is not related to investment rules. Okay, it is related to what? Trade related investment rules, that is trade related to goods. Okay, so only that part, not related to investment whatsoever, right? So answer is 1 and 3. Clear? Next, if RBI decides to adopt an expansionist monetary policy, this was a double negative question of sort. So you want an expansionist monetary policy. So what is expansionist? Increase the money supply in the system, right? Which of the following would it not do? What is it not supposed to do? If you want to increase the money supply in the market, what are you not supposed to do? You're not supposed to increase the interest rate. Don't increase the SLR CRR. Don't do it, right? You do not have to do what? You do not have to, what else? You should not increase MSF. These are the things you are not supposed to do, right? So let's see which one fits it. Cut and optimize the SLR. You're supposed to do it, right? That is why this would not be the answer. Increase the marginal standing facility. You should not do it. True. Cut the bank rate and repo rate. You are supposed to do it. It's not to do it. So this would be wrong. The answer is 2 only. Clear? Next. With reference to Indian economy, this people suggest that this is a current affairs related question, but even with a minimal knowledge about the trends, you would be able to solve this question pretty easily. You need not know the reports as such. Just you have to be a bit more cautious, bit more inclined towards reading between the lines, especially in such questions. Okay. So Indian economy after 1991 economic liberalization, consider the following statements. One thing is for sure, after 1991 more people moved away from the rural areas towards the urban areas. This we know for sure. The rural areas which were highly dependent on agriculture did go for other, you know, employment opportunities as well. Even in the rural area they shifted to other things, like a poultry business, or for that matter aquaculture. So these things they started doing apart from agriculture. Allied activities they stepped into more, shops, small shops, right? Smaller merchants. So all of this started. Yes, by this measure, let's see. Worker productivity increased in urban areas while it decreased in rural areas. So rupees per worker at 2004-5 prices. So worker productivity increased in urban areas while it decreased in rural areas. We don't know anything about it. Let's keep it aside. The percentage share of rural areas in workforce steadily increased. Look at this percentage share of rural areas in workforce. So when people are moving from rural to urban areas, how can it actually increase, right? So statement 2 is absolutely wrong. So with that you eliminate A and D. Done. So when you eliminate A and D, you clearly have to remove 1 as well, right? You're only left with 3 and 4 now. So 3 is in both, so it has to be the answer, right? In rural areas the growth in non-farm economy has increased, obviously. So 3 is right. What about 4? The growth rate in rural employment decreased. Obviously, when people start, whenever urbanization happens in an economy, people, though they stay in rural areas, they will be moving towards urban areas for work, right? So the number of jobs created in the rural areas will automatically drop. There can be multiple reasons like mechanization of agriculture, opportunities provided by other sectors, that is your secondary sector and tertiary sector. Because of these reasons, the growth rate in rural employment might have decreased. Clearly, it would decrease whenever urbanization increases. So after 1991, urbanization has increased. So 3 and 4 is the right answer. So you can go with B, right? Even without any knowledge about 1 and 2, you would be able to solve this particular question. Next. This is about the cooperative societies in the rural areas. So first you have to know what is the hierarchy in the cooperative societies in the rural areas. You have the state cooperatives at the top. Below that you have the district central cooperatives, right? District central cooperative banks. And below that you have primary agriculture credit societies, PACs. State cooperatives lend to DCCBs, and also the union government does lend to, provide some finances to DCCB. And DCCB's main work is to provide the funds to PACs. So in terms of short-term credit delivery to agriculture sector, DCCBs deliver more credit in comparison to SCBs and regional rural banks. No, it's not possible. Why? Because the sheer scale at which we are speaking, the number of scheduled commercial banks and the regional rural banks will far be higher than the number of district central cooperative banks you have, right? So the financing ability of scheduled commercial banks, even with that PSL norms of 40%, will be very high, right? So statement 1 is wrong. One of the most important functions of DCCBs is to provide funds to PACs. That is absolutely right. So option 2, right? B only. Okay. Next, if another global financial crisis happens in the near future, which one of the following actions or policies are most likely to give some immunity to India? So giving immunity to India, right? That's what we are supposed to focus on. Basically, anything risky you are supposed to eliminate. If you don't depend on short-term foreign borrowings, is it good or not? Is absolutely good. Opening up of more foreign banks, so that would be leading to what we call as a contagion, right? So there would be a contagion, as in if something happens in a different country, right? So if that country's bank is present here, obviously we will be exposed to the risks, right? So spread of financial contagion becomes easier. So this is not a good option. Maintaining full capital account convertibility. If you maintain full capital account convertibility, it means FPI can enter, FDI can enter without any restriction. At the same time, they can leave as well, especially FPI can leave as well at will, at its own whims and fancies, right? So that is why there is supposed to be a restriction on FPI especially. So if you maintain full account convertibility, it would lead to more problems, just like what we found in the East Asian crisis. Okay, East Asian crisis. So FPI is known as hot money for this reason itself. So you have to, not go for capital account convertibility, full capital account convertibility. So that would be safer. So answer is one only, A. Again, this is not related to current affairs. So though you have an inclination to put it under current affairs, it is not. Okay. And finally, if you withdraw 1 lakh rupees in cash from your demand deposits account at your bank, the immediate effect on aggregate money supply in the economy will be. So basically, it is talking about what would happen to the M3, right? If you withdraw the money from the demand deposits, right? So M3 would be equal to what? M3 would be equal to currency with the public. Yes, currency with public plus you have the demand deposits with banks plus time deposits with banks. What is the question saying? Question is saying you're going to withdraw 1 lakh rupees from here, and where does this 1 lakh rupee go? It will go to this currency with the public, currency in the hands of the public. How will it change M3? It does not change. To leave it unchanged. Answer is D. Clear? So that's the end of it. So 13 questions were there. Sorry, there is one more question. With reference to international trade of India at present, which of the following statement is or correct? So this again looks like more of a current affairs question, but we'll see if it is possible for us to solve it with our static knowledge itself. Okay. So India's merchandise exports are less than its merchandise imports. No, this is not possible at all. You can check all the years, right? Rarely do you find a year where exports are more than, imports. So merchandise exports are less than, exports are less than merchandise imports. This is absolutely right. So you will not find a year where merchandise imports are less than exports. Clear? So one is absolutely right. India's imports of iron, steel, chemicals, fertilizers, machinery have decreased in recent years. Let's suppose you don't know anything about it. We'll leave it aside for a second. Next, you have India's exports of services are more than its imports of services. So we export more services or import more services? Every year you check, you just look into the economic survey graphs, you will clearly find exports we are good at, especially when it comes to what? Services. Okay. And we import less of services every year. So with static knowledge, trend knowledge itself, you will be able to solve it. So this is right as well. India suffers from an overall trade or current account deficit. This is absolutely true. We suffer from what we know as twin deficit, right? We suffer from what is known as twin deficit. So we don't know anything about 2, right? So even with that, 1, 3, 4 are right. So is there any other option left? There is none other option. So answer is D. So this keeps on changing. In that particular year, actually, iron and steel imports had reduced, whereas all the others had actually increased. Clear? So even with your static knowledge, proper static knowledge, you'll be able to answer most of the questions. Probably there will be 1 question or 2 questions which require the current affairs knowledge. Otherwise, you'll be able to clearly answer almost all the questions related to economy with proper understanding of concepts. Clear? Thank you for watching. We'll meet you again with the next set of questions related to 2019 Indian economy. Do watch other videos related to previous year questions on all the subjects year wise, right? They will be uploaded one by one on a daily basis. Okay, thank you for watching. Have a nice day. Do subscribe to our channel. Have a good day.